Hi, welcome back to Joe Blogs. This video is the next in a series looking at the ongoing decline in the value of the Russian ruble. And the reason why I'm posting so many videos about the Russian ruble is because it's the one piece of live data that we've got that links directly to what's going on in the Russian economy. As we've discussed many times before, the strength of a currency is directly linked to what's going on in the economy. If your economy is booming, if all your companies are trading well, then that means that lots of companies overseas want to do business with them, they want to buy their products, and therefore the demand for your currency increases, and that pushes up the value of your currency. However, if the opposite situation is going on, if your economy isn't doing very well, therefore your companies aren't trading with lots of overseas entities, then the demand for your currency drops, and therefore the price falls. And so when we see a falling currency, it tells us that there are fundamental problems in that economy. And what we've seen happening to the ruble over the course of the past few months is that it's been falling. However, the rate of the decline of the ruble is now picking up pace. I've posted 2 videos on this topic over the course of the last 2 weeks. On the 14th of November, I reported that the value of the ruble was sitting at 99.9 against the US dollar. It was very close to that 100 level that President Putin was looking to protect. Back in the summer of 2023, when the ruble fell to that level, he instructed the Russian central bank to do something about it. They stepped into the market and it then improved in value to around about 90. And that's where Russia was aiming to keep it. However, over the course of the last 12 to 18 months, the Russian central bank has struggled to be able to keep it at 90 because it's become more and more expensive and Russia is running out of funding. And on the 14th of November, it was very close to breaching that 100 level. I then posted another video 5 days ago talking about the fact that the ruble had smashed through that 100 level and was then sitting at 104. And today, it's now dropped to 109. And what we're seeing here is that now the brakes have been taken off. Now the Russian central bank doesn't seem to be able to keep the value in check. It's dropping like a stone. The value has fallen 5% in the last 5 days and 9% in the last 2 weeks. And for a major international currency, that is an absolute crash. And the reason why this is important is because it has a huge influence on Russia's trade, because Russia is still doing international trade, it's importing and exporting. And when the value of the ruble goes down, it has a major influence. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the course of the past 12 months. And to pick up on a question that comes up frequently in the comments as to why I'm not showing the ruble first, so that we would have a graph that's going downwards rather than upwards, the reason for it is because the US dollar is more than 100 times more valuable than the ruble. So if I was talking about the ruble first, I'd be talking about 0.001 against the dollar, and it gets a little bit confusing and I think it's a bit nonsensical. So it's much more simple and straightforward to talk about it in dollar terms. And what we can see from this chart is that the value of the ruble is now sitting at 109 against the US dollar. So 1 ruble is now worth less than 1 US cent. And if we focus in on what's been happening over the course of the past 3.5 months, you can see that the decline in the ruble is accelerating. On August the 5th, 1 US dollar was trading for 84 Russian rubles, and that was actually one of the strongest levels that it had been trading at for the previous 12 months. However, over the past 3.5 months, we've seen a rapid decline in the ruble, and the current level of 109 represents a fall in value of 30% since the start of August, and that represents a number of major problems from Russia's perspective. And just in case you're thinking that the reason for the decline in the ruble is because the US dollar is trading very strongly at the moment, this chart shows the exchange rate between the Chinese yuan and the Russian ruble. And the Chinese yuan is actually the currency that Russia is trading mostly in with its overseas trade, because China is now Russia's single biggest trading partner. And what you can see here is that the shape of this chart is identical to what we just looked at for the US dollar. And if we look at what's happened over the past 3.5 months, at the start of August, 1 Chinese yuan was trading for 11.7 Russian rubles. Today, it's trading for more than 14.9, which represents a fall in value over the past 3.5 months of more than 27%. And this chart shows the exchange rate between the Indian rupee and the Russian ruble. And India is Russia's second largest trading partner because of all of the oil that it's selling directly to India. And what you can see here is exactly the same shape as we've seen for the previous two graphs. And if we look at what's happened over the past 3 months, the value of the ruble has fallen by more than 28% against the value of the rupee. One of the reasons why the fall in the value of the ruble is a major problem for Russia is because Russia is still importing lots of goods. Russia is a net exporter, but the majority of things that it's exporting are commodities, so things like oil and coal and gas. So it's exporting raw materials and it's importing a lot of finished goods. And finished goods are obviously added value. You pay more for something that's been made and constructed and manufactured than you do for basic raw materials. And the fall in the value of the ruble means that the price of everything that Russia is importing is going up. So I've talked about this before, but I'll give you a very quick example. If you think about a product that's priced at $1 in the international markets, at the beginning of August, 3.5 months ago, that product would have sold in Russia for 84 rubles because the exchange rate at that time was $1 for 84 rubles. That same product today would now be selling for 109 rubles because the exchange rate is $1 to 109. So that represents an increase in cost of almost 30% to Russian consumers. And when you put that into the context of what's happening with Russian inflation, the latest data that's been published by Russia shows that inflation is sitting at around 8.5%, so nowhere near the 30% that the fall in the value of the ruble would indicate. So there's going to be added pressure to inflation in Russia, and the problem when you have high levels of inflation is that the only way that the Russian central bank can deal with that is by increasing interest rates. Now, the Russian central bank has increased interest rates on 7 occasions over the past 18 months, and the current rate of interest in Russia is 21%. And 21% interest is prohibitively high. Companies and individuals do not want to take out loans at 25 to 30% cost. That's prohibitively expensive. They just won't do it. So what that means is that people will tighten their belts. They won't take on loans. They won't do things like home improvements. Companies won't take on debt to increase their output or buy a new factory or extend their facilities. And so everything starts to slow down. There will be less circulation of capital. People will be saving their money rather than spending it because prices are starting to rise. And all of that has a really negative impact on the economy. So the fall in the value of the ruble is directly linked to what's happening in the economy. And what we're seeing is as the ruble goes down in value, it indicates to us that the economy is slowing down. One of the only benefits of the fall in the value of your currency is that it can make your exports cheaper. So if we take an example of a product that's being produced in Russia that's being sold overseas that costs 109 rubles to make. In August, that product, priced at 109 rubles in the international markets, would have been selling for $1.29 because the exchange rate at that point was 84 against $1. However, that same product today would now be selling for $1 because the exchange rate today is 109 against the dollar. So in international terms, that product has fallen in price, and theoretically, therefore, people may buy more of it. It might increase the volume of sales, and therefore, overall, you could sell more and make more profit. However, the problem that Russia has, as we identified earlier in this video, is that the majority of its exports are commodities. They're selling oil and gas and coal internationally. And the price of those products is set by the international markets. It isn't really affected by what's happening with the ruble. The price of a barrel of oil is the price of a barrel of oil. It changes on a daily basis, but it's due to global supply and demand. It's not because the Russian ruble is moving in value. So Russia won't suddenly get a huge increase in orders because the value of the ruble has gone down, because the price of that barrel of oil will still be benchmarked in US dollars or Chinese yuan or some other currency. It's not being benchmarked in rubles. At the start of the invasion of Ukraine, President Putin was keen. He was looking to get the ruble as an established currency to compete with the dollar for benchmarking. However, that hasn't happened. And in fact, China and India, who are the two biggest trading partners of Russia, have both refused to deal in rubles. China will only deal in Chinese yuan, and that's one of the reasons why the value of the yuan has been going up. And India will only deal in its own currency. However, Russia refused to do that, and so they're now dealing in a hybrid of Chinese yuan and United Arab Emirates dirhams. So there's been no benefit whatsoever in terms of the fall in the value of the ruble from Russia's perspective, because nobody's pricing their exports, oil, gas and coal, in rubles. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with the value of the ruble is absolutely fascinating, and is also critical in terms of telling us what's going on in the Russian economy on a daily basis. All of the other data that Russia releases only comes out once a month, and in fact that data is now highly limited. We only see things like inflation and the rate of interest, and so you're having to interpret what's happening in the economy from that limited amount of information. But what we're seeing with the value of the ruble tells us that there are serious problems with the Russian economy. When a currency falls and continues to fall on a daily basis, it tells you that there are serious issues. Nobody is wanting to trade in rubles, so the demand for rubles has fallen dramatically. So that's one of the reasons why it's falling. But interestingly, over the past 18 months, the Russian central bank was able to manipulate the value of the ruble to the level that it wanted to keep it at, and it was trying to set it at around 90 to 1 US dollar, which interestingly was lower than where it was trading before the invasion of Ukraine, but seemed to be the place where Russia was comfortable. However, over the course of the past few weeks, we've seen that level starting to fade, and we've seen it breach 100. We've now seen it breach 105, and it's heading towards 110. And it will be really interesting to see whether or not the Russian central bank tries to apply the brakes again at maybe 110 or 115 or 120, or if it simply doesn't have enough cash to be able to do that, whether it's going to just keep going. And if it does, who knows where it could go? It could go to 150, it could go to 200. And if it does fall to those sort of levels, that tells us that there is a massive problem going on in Russia right now, because as we've discussed, the problem with the fall in the value of the ruble is that it makes all of the imports that Russia is having to buy more expensive. So that drives up inflation. And when you've got high levels of inflation, that means that interest rates go up. Now, Russia already has some of the highest interest rates in the whole of the world. If it keeps increasing its interest rates, then that's going to break the economy in itself. Nobody is going to want to borrow any money, Russian companies. And also, it means that the growth in the economy is going to really slow down, because everybody is going to tighten their belts and hold on to their spare cash. So the overall summary of today's video is that we're continuing to see a fall in the value of the ruble, and that fall is now accelerating. That tells us that there are serious problems happening in the Russian economy right now, and if the ruble continues to decline at this rate, it could get to a serious level where imports start to become 50%, 60%, 70% more expensive. That's going to drive up inflation, that's going to put pressure on interest rates and cause further problems for Russia and the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.